Thanks for joining us at lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Meera Dugal. Let's get to the headlines. Indian markets trade at the day's highs, led by Z Entertainment and JSW Steel.
Axis Bank picks 7 merchant bankers to arrange a planned share sale of at least $1.3 billion, which could go as high as $2 billion. That's a Bloomberg exclusive.
The Supreme Court orders all rebel MLAs to appear before the Karnataka Speaker by 6 p.m. today. 10 Congress MLAs jump ship and join the BJP in Goa.
U.S. Federal Reserve Chair Jerome Powell signals a rate cut for the first time in 10 years in his congressional testimony.
All right, first take a look at how markets are faring. Darshan is here with us.
Yeah, so decent day today. Both the Nifty and the Bank Nifty are doing equally well, and the lead in both of them are by the HDFC twins. So they are doing well. The Nifty Bank is also up. The Nifty is also up almost 0.7%. What is, however, not doing well is the mid cap and small cap end of the market. That, however, continues to stay flat. The small cap index obviously trading almost in the red, so there's not much traction. So it's select stocks which are moving the index higher. The HDFC twins, the ITC. A couple of stocks that I want to highlight. First of all, it's IndusInd Bank, and it has had a very strong recovery. It's up almost 3.5%. The last time I checked, remember, they will come out with numbers tomorrow, and it will be the consolidated Bharat financial numbers that came in. Interglobe Aviation continues to drop. It's down another 4% in trade after the 15% cut that we saw yesterday. So there is more issue. NMDC already had reacted to the Dondimalai issue over the past few days. Today is seeing a little bit of profit booking that is coming in. Pharma as a package doing well. A lot of pharma stocks, be it Cadila, which saw an HSBC upgrade target price increase, or a Dr. Reddy, which benefits from the Amnil commentary that came in, or an Indoco. So all pharma as a pack is generally doing well. And finally, two stocks I want to highlight, HEG and Graphite India. Both of them have corrected almost 70% from their peak, among the top losers as far as the Nifty 500 is concerned. So it seems that the graphite electrode story is actually fizzling out over the past few months.
Darshan, thank you for that. Let's move on. SEBI has deferred hearing counterparties in the Nifty option settlements case, a case that could make or break the trust enjoyed by Indian clearing houses. After the 400 crore trade initiated in December last year, the market regulator now plans to move the Supreme Court against the SAT order. Sajit Mangat is standing by to explain what exactly has happened in this case.
Foreign investors are very keenly looking at this trade settlement case. This case mainly pertains to transactions in Nifty options of 5,000 call series, which expired on June end, and as a result of which, instead of this trade getting settled, the counterparties, asked for annulment of the trade. In between, there is National Clearing NSE Clearing Corporation, which is the clearing body for all these trades, and the counterparties are ILNFS, which is a clearing member, and on the other side are foreign investors like Citigroup, Morgan Stanley, BNP, and Premji Invest. Now, this case has been going on for the last couple of months. Finally, when SAT in early July asked SEBI to intervene and try to decide on the case, SEBI yesterday decided not to hear the case, instead go and challenge SAT's order in the Supreme Court. Now, that challenge is expected by the end of the week or tomorrow, where the hearing, when the hearing can happen in the apex court there. But the bigger question which is coming into the entire issue is the reputational risk that Indian markets is going to take as the case prolongs and as regulators push from one jurisdiction to another jurisdiction. It started off with SEBI pushing the case to SAT, SAT again pushing it back to NSE Clearing Corporation, and the NSE Clearing Corporation refusing to annul the trade led to the parties or ILFS securities moving to Supreme Court. The Supreme Court Supreme Court basically said that SAT should be hearing the case, and when it went in for hearing in SAT asked SEBI to decide on the case. Now SEBI has now again pushed the ball to the Supreme Court, and which the court will have to decide whether it hears the case and comes out with a judgment, or directs any of the parties to come out with a judgment there. Anyways, it's looking like a prolonged case because the settlement was supposed to happen on June 27, and it's almost mid of July. we don't have an idea of when the settlement will go through, and that's what is nerving many of the foreign investors, that a trade settlement or clearing which is supposed to be very which should not be interfered with. Here is a case where a classic case where it is getting interfered because one of the parties is asking for a trade annulment, and this case may be a precedent for all future trade clearing and settlement going forward. And that's why we're seeing a lot of foreign investors and jurisdictions looking very closely how the Indian market regulator and the judicial body or appellate body is going to decide on this case.
All right, Saji, thanks so much for that. The additional surcharge on FPIs and alternative investment funds within the Category 3 has spooked the Indian equity markets and soured sentiment over the last few days. CBDT Chairman PC Modi, though, clarified last evening that the move is not specifically targeted at overseas investors. He said they can convert their trust structure into a corporate entity to avail of a lower tax rate. Listen in.
The consideration was that the people who have the higher ability to pay can shell out more for this cause of nation building. And those were the people between 2 to 5 crores or 5 crores and above. That is why that difference in surcharge. And again, the base rate was not changed. It is just the surcharge which was changed. As a collateral damage, if you can call it, it affected the FIPs or the AIF 3 category, this thing. But there again, the option is to go to the corporate structure. I mean, say if they desire, it has been amply clarified in the clarification which has been provided. So I don't see that there is any kind of a differential treatment or this thing. Basically, the increase in surcharge was just to allow some benefit for the lower end. One of the options was to go in for increase as such, but that was not considered to be favorable.
Let's move on now. SR Steel's secure lenders are not happy with the NCLAT's order. The appellate tribunal had ruled that the committee of creditors do not have the powers to decide on how to use the funds recovered during the resolution process. SBI Chairman Rajnish Kumar told Bloomberg that the lenders have decided to challenge the order in the Supreme Court. Speaking to Neeraj and Vishwanath, he said it's unfair to equate financial and operational creditors at par. Here's a slice of that conversation.
This judgment, one is that lenders are not satisfied with this judgment, and definitely either Honorable Supreme Court, they will have a look at it. Many decisions of the Honorable Supreme Court, like Swiss Ribbon case, which laid out a lot of principles in IBC. So this decision seems to be at variance with what was stated in Swiss Ribbon case. So this is something, and again I am saying this, I had said earlier also, that the law is evolving. There is a complete clarity about the waterfall when an enterprise goes into liquidation.
Correct.
It does not leave any scope for any doubt.
Correct.
The option for the secured creditor to keep outside insolvency process and pursue either under SARFAESI Act or DRT, that option is also available, right? And IBC, during the resolution process, one thing is very clear, that it was never meant to be a recovery process. Unfortunately, it got confused with the recovery process for the secured financial creditors. Sure. So that is very clear that it is a resolution process. But the danger is that if in the resolution process there is no incentive for the financial creditor to pursue that course, then it can be counterproductive. Because I have the option of like not accepting any resolution plan.
Correct.
And press for liquidation where I have the superiority.
Yes.
Or I have the option of keeping out the resolution process and enforce my security under either SARFAESI Act or DRT. Now DRT, we know that it takes quite a long time.
Yes.
Yeah. So if in IBC also it takes a similar time, 3 years to resolve, and that too I have parity with the operational creditors, then bank as a lender, as a secured creditor, I have to evaluate whether keep out outside IBC or be in IBC or press for liquidation.
You can watch the full conversation today at about 1:30.
Axis Bank is looking to raise up to $2 billion to shore up its capital base, and as many as 7 merchant bankers will manage the share sale. Anthony of Bloomberg News reports.
That's right. Axis Bank has chosen bankers to manage their initial shares, their additional share sale, which is expected in the later part of the year. Yesterday, the bank has made a filing to the exchange that they will be seeking the board approval to raise funds to boost their capital adequacy ratio. As we know, the lead banks are Citibank, JP Morgan, and Axis Securities. They have also chosen other 4 banks, including BNP Paribas and HSBCs, for the deal. So we are waiting for July 20th to see how much they would be, what sort of board approval they will be seeking to raise funds.
And thanks for that. As we step into the first quarter earnings season, Samit Sarkar and Darshan have compiled a list of stocks that you need to watch out for. If you go by Bloomberg estimates, that is, these companies have witnessed the biggest EBITDA changes in the quarter ended by. So Darshan, what's on the list?
Yeah, so we've taken 20 stocks. We've put that on the website. Our story is there, but for right now, we'll discuss just the 10 stocks. So basically, the first methodology, what we've done is taken all the stocks that are listed, in which there are more than 10 analyst rating, and for which there are estimates available on Bloomberg. So basically, these are the stocks in which we see a big operational change. So we're not taking financials into consideration because we're looking at the EBITDA level. Now, 5 stocks in which there is a significant amount of improvement in EBITDA include counters like Biocon, Orient Cement, IPA, Dixon, as well as Teamlease. Now, for Biocon, there is momentum in the biosimilar business. Syngene has been doing well, so that will contribute to the EBITDA growth for the company. For Orient Cement, there is higher volume growth. The cement prices are much higher, and they've done a capacity addition, which will help them. For IPA Labs, they have been starting to, ever since they came out of the US market because of the import alert, they have been struggling, but the base is lower, and there is higher exports this time around, and the product mix is much better, and the India business is expected to do well. For Dixon Tech, there is volume ramp up that is seen, and there is growth that will come in from the consumer electric and lighting product business. For Teamlease, they recently acquired a company called Eccentric, so the operating leverage will come in from there, and there is specialized staffing business will also aid them. Now, there are also companies in which we will see a lot of negative EBITDA fall that will come in. Basically, this will include a lot of large caps, companies like the oil marketing companies, Maruti, Oberoi Realty. Now, for oil marketing companies, there will be inventory losses this time around compared to inventory gain, and that is the prime reason while the EBITDA will come down. Maruti, we've seen the sales numbers that have come down. The Gujarat plant fixed cost has gone up significantly. A rise in commodity prices, all of them will impact the margins of the company. For Oberoi Realty, there was a high base last time around, but there has been a slowdown as far as their Mulund and Goregaon project is concerned. Phenolics industry, in terms of the plastic piping, there has been decline in spreads, and that will impact them significantly. And finally, JSW Steel, for steel companies, it will be a sluggish quarter. The spreads have come down significantly, and the seasonality factor will play in. So these are the stocks that we see will see the maximum operational decline in decline or gain in the first quarter.
All right, Darshan, thanks so much for that. The Reserve Bank of India has released a draft report which proposes to extend the trading hours for the currency markets. The report suggests that forex trading be extended from 9 a.m. to 9 p.m., both for exchange traded and over-the-counter markets. Timing for call money markets too may be extended till 6 p.m. However, the report does not propose an extension in the trading times for government securities. To discuss these draft proposals, joining us on the phone line is Sajal Gupta, Head of Forex and Rates at Edelweiss. Mr. Gupta, thanks so much for taking the time to speak to us. I think the crux of the story comes down to the FX markets more than anything else, so I'll focus on that. This is not a new demand, but the RBI puts out a whole lot of data, particularly from the offshore markets, to justify the need for extended trading times here. Do you agree with that?
This is an old standing demand of the industry and market participants. And that's why you see that most of the Indian traders or Indian companies look for overseas venues to hedge their exposures post 5 o'clock in India. In the sense, if you still look at other currency pairs like euro, pound, yen, they trade almost 24 hours and 5 days. It was anomaly that India, being the 6th largest economy in the world, and we only operate from 9 to 5, is kind of primitive times as we talk about.
Mr. Gupta, so I think, the RBI put out data on the offshore markets, and this is something that's been talked about. We'll get formal data, when a survey from the BIS comes out later in the year. But it is very clear, and I'm sure you, through your clients, also get a sense of how the volumes are moving offshore increasingly. But the trading timings will sort of be one part of the solution to that?
Clearly. In the sense, anybody who can't access markets post 5 o'clock was looking at avenues overseas to hedge their exposures. So if a US client, so suppose an Indian client who is exporting to US, gets an order post 7 o'clock, 7 p.m. in the evening, he has no venue to hedge. So he would look at overseas subsidiaries where he can hedge in NDF or DGCX or SGX. So primarily now those type of clients can hedge in India itself. So I think it's clearly, in the sense, a lot of offshore volume may shift back to India, and you have a better control on the forex markets in that case. Otherwise, what is happening is that 40 to 50% of the volumes which gets traded in FX gets done on overseas markets. And that primarily reduces RBI's capacity to control the forex rates in onshore country and monitor the same.
True. Mr. Gupta, should the RBI make this a final proposal and the timings actually get extended, what will be the procedural issues that will come up? Will they be more on the exchange traded side or the OTC side? What do you see as the hindrances?
The hindrances can be in terms of payment settlement and all, in terms of margin requirement on the exchange or on the bank side, because RTGS timing and NEFT timing also needs to be extended in case there is a volatility in currency. But I think that should not be much of a concern, because even today, in the sense, commodities market trade till late in the night, and we are managing the commodity risk pretty well, commodity being more volatile than currencies as of now. So should not be a concern, but yes, gradually our payment systems and other systems needs to get aligned to this.
Also staffing, and particularly given the role of PSU banks in the forex system, sir, do you think that'll be a hindrance as well? And I think the RBI mentioned that within the banking sector there are divided views on whether we should go in this direction or not.
Yeah, I think that always is a concern when you go towards more liberalization. But you have to look at from this side that primarily you will see more job opportunities being created. In the sense, obviously you can't expect a dealer to operate from morning 9 to evening 9. So maybe you will have two people, one coming at 9, going at 6, another coming at 12, going at 9. So maybe you will have more employment opportunities. So the positive side is this, and obviously there would always be hindrances or reluctance in terms of operating longer hours, in terms of both from banking and broking side, that you have to put in more manpower. But I think ultimately you will reap more rewards once the volume shift from overseas to Indian markets.
So there's been no recommended timing change on the government securities markets. That makes sense because that's still largely a domestic market, right?
Correct. Forex is more international and more correlated with global markets. So, but ultimately, in the sense, even the GSEC market needs to have extended timings. In the sense, broadly, if you look at globally also, the market hours are much more longer than what they are in India as of now. And it's a long-standing demand from customers and market participants.
All right, Mr. Gupta, we'll leave it there. Thank you so much for that quick view. These are just draft recommendations. We'll see if they get finalized.
Let's move on now. This is the political drama continues to unfold in Karnataka. 15 MLAs have approached the Supreme Court after the Speaker refused to accept their resignations. The court has adjourned the proceedings until tomorrow, but the rebel MLAs will have to appear before the Speaker at 6 p.m. today. This under condition of police protection. Arpan Chaturvedi now joins us from what transpired at the Supreme Court. Arpan.
That's right, Harsha. So the 10 MLAs who have submitted their resignation, but they've not been accepted as of now. The Speaker had given them the date of 17 July when he had asked the MLAs to meet, and of course he has also not given any specific deadline as to when the resignation would be accepted. They approached the court today. Senior Advocate Mukul Rohatgi appeared in front of the Chief Justice of India led bench, and he said that the Speaker has been delaying and using delaying tactics, which is why he sought that the court direct and give a specific time as to when the MLAs can appear in front of the Speaker. So the court and the Chief Justice's bench passed the orders and directed the MLAs to appear at 6 p.m. today in front of the Speaker. The bench also requested the Speaker to take a decision on their resignations today itself. Remember, the important point here is that we do not know what is the side of the Karnataka Assembly Speaker, because no notice has been issued in this case as of yet. This was an ex parte order order, and the next hearing now in this case will take place tomorrow, and of course the speaker, the Karnataka MLAs also said that they request that the government, the Karnataka government, provide them police security in light of what we saw in Mumbai as well as Bangalore yesterday. So the court has also directed the DGP of the Karnataka police to provide securities to these MLAs from the moment they land at the Bangalore airport.
Arpan, thanks for that. Also hear out what senior advocate Mukul Rohatgi had to say after the proceedings.
The court has accepted the request of the 10 MLAs who have resigned that they will appear before the speaker at 6 p.m. today, which means that they will fly from Bombay to Bangalore. The speaker will give them an audience, because it was our case that in the last few days the speaker did not give them an audience. The speaker will pass an order on the plea of resignation. The order will be placed before the court tomorrow. The case will come up tomorrow, and the DGP Karnataka has been directed to provide proper police protection to all these 10 MLAs when they land in Bangalore and go to the speaker's office. The matter is directed to be placed tomorrow.
Well, the Congress leader from Karnataka, DK Shivakumar, who's been trying to get these rebel MLAs back in the fold, is still hopeful. He says he's waiting for sense to return to them.
Let us see. There is time till evening. Let us see. We hope so. Some good things sense will repair, will come with all of us, and there may be changes. Any moment, politics may change.
And it's not just in Karnataka. Congress has suffered a major setback in neighbouring Goa as well. 10 out of its 15 MLAs have broken away to join the BJP. The group led by opposition leader Chandrakant Kavlekar handed a letter to the speaker last evening announcing the move, and the BJP's strength in the assembly now stands at 27.
On to international news, Jerome Powell has left no doubt that the US Federal Reserve is gearing up for its first interest rate cut since 2008. This in the face of a cooling global economy and persistently low inflation in the US. Bloomberg's Kathleen Hayes brings us the highlights of his testimony to Congress.
Risks from overseas, the risk from a trade war that creates uncertainty, tensions that could spill over into the U.S. economy. And these are the kinds of things that he put in his remarks, just in answers to questions, in his prepared remarks when he spoke to the House Financial Services Committee today. And in fact, compared to where the Fed saw the economy at the June meeting, he says manufacturing, trade itself, and investment have all weakened since that meeting. And when it comes to the big question for investors, for economists, about what the Fed will do next, Representative Carolyn Maloney from New York asked the question that everybody wanted to hear. Here's what Jay Powell said.
Did the June jobs report change your outlook for whether a reduction in interest rates is appropriate in the near term?
Well, a straight answer to your question is no.
Okay, and let's hear the rest of what Jay Powell said.
The bottom line for me is that the uncertainties around global growth and trade continue to weigh on the outlook. In addition, inflation continues to be muted, and those things are still in place.
So there you have it, the global economy, the risk to the U.S. economy. But Jay Powell, didn't you also say, especially in prepared remarks, that the labor market's looking pretty solid, the consumer has come back? Aren't you worried that a tight labor market could boost inflation a bit more than you want to see? Jay had an answer for that, too.
3.7% is a low unemployment rate, but to call something hot, you need to see some heat. And while we hear lots of reports of labor, of companies having a hard time finding qualified labor, nonetheless, we don't see wages really responding, so I don't really see that as a current issue.
With the Fed in the middle of its big monetary policy framework, for you, probably not surprising that a lot of the Congress people picked up on what's wrong with inflation? Why isn't it rising? What are you guys doing? And he admitted that things have changed. He said now, instead of having a Phillips curve where low unemployment boosts inflation, he said the link between inflation and unemployment is just a faint heartbeat.
Kathleen Hayes reporting from New York. Out of time on the show. Thank you so much for joining us.